I think one of the things I learned working with you guys, Anubhav, is to be on top of a game. So while I am purchasing and managing properties, I'm also trying to be on top of the game. And I just got this one and the second property that I purchased valued again. It's good to test the waters, right? And on an ongoing basis. So I think the valuation I got from one of the agents in that area was roughly about 525. But I think I can push that further higher up. And I'm talking about November 23, purchase price at 330 to 525 in March of 2025.
Yeah, so nearly 1.5 years we're talking here. And your property has gone up nearly 200K approximately.
Yep.
Wow. So that's 200K, nearly 200K equity in less than just about 1.5 years. That's amazing. So then you obviously, as you said, you did your second property with us, which was soon after that in 3 to 4 months. In 31st of January, we bought you another property in 4 months. And that property is settled in March 24, which is about nearly a year ago. And that was in Queensland. We bought that for close to around 460,000 for you, with a rent of 463, and the rent is now $600 per week on that, correct?
Yep. Absolutely. Now, this one is very unique, actually, Anubhav. Before you even ask me a question, this one was very unique from my standpoint. When I looked at the price that was probably the offer that was being requested by the vendor, they mentioned prices above 430 or 430, 36, something like that. And I was like really, really confused at that point of time. Like, I was like, okay, hang on, asking prices above 430. How on earth should I accept offering more than $30,000 for that? But this is again where I think I had so many questions, so many doubts, so many clarifications that I sought. And I think that's how I got my confidence that yes, it's, a substantial, roughly about 8% higher than the asking, and it is still worthwhile a deal. And I went in and trusted the process, and less than 6 months, I saw the property prices started going up, and I was surprised myself when the rental figures touched 600. So incredible experience, trusted my gut feel, trusted the process, and the results are astounding. But I think there are times actually when you need that support and guidance in making the right offer. Because if I was stuck in my mind with 30,000 is too much, 8% is too much, I would probably not have jumped on the bandwagon, probably would have missed out on the opportunity.
So just to summarize, what you're saying is you paid more than the asking price in a hot market like that. 430, we secured something at 463, so $30,000 more, which is 8% more. But fast forward now in 12 months, how much is the property valued now?
This was the second one. 550 is what the last offer I got from the sales agent.
Right. So that's nearly $90,000 up in 12 months. Awesome. So in spite of you paying $30,000 more, you still made 90K more in 1 year.
Exactly. And this is effectively what I'm saying. Had I not gone 33,000 higher, which seemed like not so sweet thing on my palate, but I was talking to one of your operations team members. He helped me basically go through the market fundamentals and help me understand that how the market really is operating in that situation. I don't think that's basically how it stacks up all the time, but how the market was, we need to respond appropriately, made the move based of the right inputs, and the outcome pretty good.
Yeah, and clearly, give or take, a lot of this is to build the confidence alongside when you can made a suggestion that we have to pay over the asking price. We're setting that expectation. We know what we're doing in the market, because in a hot market, when you have multiple offers, it's extremely difficult to secure something below the asking price. And asking price is a number which a vendor wants. That doesn't necessarily mean is the price that is the market price. And it's very hard to go online and check that number against the current property sold nearby, because you won't find it. Properties are lag. It takes time before the data is shown online. And as a result, anything that is selling right now, the contracts are getting signed right now in a hot market, in a state market, it's impossible to find that price point. So trusting the team, again, what I'm hearing, has led you to take that action and secure this $90,000 growth in just 12 months on a property like that. Right. And then you went off a little bit thinking, okay, I should get educated, and then did a course, right?
Yes.
And that decision between that and the third property that we bought right now is nearly a year before you came back on your third property with us, right?
Yeah.
So that decision in between that you said, Of course, education is great, but of course, the action part and to secure something, the confidence that you needed to gain in order to do that, that was lacking. So you came back to the team to try help you with the same thing again.
Oh, 100%, 100%. I think the message there is, there's always going to be opportunities somewhere. There's never going to be a dearth of opportunities. I think at the moment, what we have is something that is reasonably affordable, which is increasingly starting to go in territories of unaffordability for certain people. For example, the property I secured for 330,000, I don't think if that is selling for 525 now, how many other markets there are at the moment that can give you that sort of price point for you to enter. So that has definitely gone high. And I would like to believe that that price point is going to keep increasing. And then eventually, you might probably get some higher risk options or lower growth options, whether it's capital growth or growth in returns from the property. So it is probably going to affect something or the other. It's not going to be endlessly that way, at least in this segment of opportunity that lies today, where if you make the move now, you make good returns. Otherwise, you can also look at the mistake I believe I made was wait around and lose on that opportunity. Like if I invested right away, like the way I did between first and second, if I did that, I would have probably gained reasonable capital in the last 8 months, which I wasted in trying to be a buyer's agent myself.
That is incredible. And in the numbers, if I were to tell you what that would have been, because you missed out the 12 months growth, that is close to around $85,000 in that market that you purchased now recently. If we had bought that last year when you were ready to go for your third one and not have waited, then you would be $85,000 in equity on your third property already, right? So that's the opportunity cost. But then again, the thing is that this is actually a message for people who are sitting on the fence, concerned, worried about things, don't want to pay the buyer's agent, thinking what value can I get, what's going to happen, should I wait, should I do it on my own? And then they don't realize that the more time you're taking to actually take action in the property market, whether it's your first, second, third, fourth, fifth, doesn't matter. The prices are only going up in the right market. So you've got to seize the opportunity. You've got to take that into consideration. By paying a few $1,000s to buyer's advocate, the right team, you're making a lot more and merely looking to put your portfolio on steroids, the way we do things for our clients. So having said that, now that you've learned the hard way, you came back, you bought your third property. Again, we are back in Queensland. And we bought a property for $583,000 recently, which you just settled 2 weeks ago. So congratulations.
Thank you.
And the anticipated rent on that is $650 per week, correct?
That's right.
Yeah, so it's yet to be tenanted, but that's great. So I guess in a nutshell, we've built a portfolio of close to around 1.4 million for you so far, 1.35 to be exact. And we have a valuation of the 3 properties so far close to around 1.7. So that's what nearly 300K uplift, whilst the third one has just settled. 300K uplift in about close to 1.5 years.
Yep.
25% up than what you've purchased. How do you feel about that?
I think that's what drives me. That's what, gets fire in my belly. While I was settling my third property, you'd remember, I started really feeling that itch all over my body. I need to start thinking about how I get to the next one. So I've already been talking to lenders, already been trying to discuss with you. The last call that we had last week, I think that was incredible set of analysis and details that we deep dived into. I think that's how I feel now with the confidence I have built, the trust I have. I think I'd probably also throw in a dash of another piece of information here. I think the ongoing support that I believe, a lot of people would probably think it's a transactional thing. You pay for an engagement, you settle a property and you move on. Then you come back, talk about another property, talk about another engagement and move on. I think that's not how things operate in my mind. And I believe that's how the relationship evolved as well. Along the journey, there was a point of time when I wanted to look at a rental evaluation. I was not able to trust my property manager and eventually went back again to the FMRE team. Reason being, I know they on the ground, they understand the market, and I got guidance from them, which validated against other property managers. That's basically how I was able to uplift the rental to a substantial increase, matching the market, which I would not have been able to if I just trusted my property manager at that point of time. So, I mean, ongoing support, I think, is really what I'm trying to call out here, which is an essential part of what I have seen come out of FMRE, which is incredible.
That's